What's going on, everybody? Welcome to another episode of the Premium Podcast. I am your host, David McDonald, aka DMD the GOAT, and today we are going to talk about the Fed. So, our last video that we came out with, we said that the Fed was not going to raise the rates, and in September anyway, but they're going to leave the door open. Well, that was confirmed just a day or two ago by the Fed Chair Powell, and so I wanted to introduce this into our circle and into our sphere. I noticed there were only 15,000 people watching when I was watching. It broadcasted 12:30 our time here, or it might have been 11:30, 2:30 Eastern Standard Time, 3 hours difference. And so my point here is for those of us who missed this is very important stuff to be tuned in with regard to the market, right? Because this is how we can consult our clients and customers in the right direction. So these things do matter. I think that we need to check them out and stay abreast of what's going on in the world. So check this out. We're going to break this down very lightly here.
And stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal.
Okay, we just started with just him saying that one thing. Now, there's a lot of people out there who say, oh, the government's not for us. The government is against us. The government, despite any macro plan that we may hypothesize about or, I may have a theory about, that's neither here nor there, and I'm not one to argue. So, but what I will say is just listen to what the man is saying. The words are very powerful. The government, the Federal Reserve, which is a private entity, but the Federal Reserve is working very diligently to make sure that inflation rate comes down. And I think this is very important note to take heed to.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
There it is.
Looking ahead, we're in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate.
Okay. At this point in the conversation, we have to give America a big round of applause because we have to, like, a big thing happened here, right? In America. So we went through in the world, frankly, we went through a global pandemic where our worlds were absolutely rocked. And I'm not saying I'm siding with the left or the right with regard to the impact, the negative impact that I know it had on so many people, right? I am one who believes that people are not meant to be alone. I'm one who believes people are meant to interact and build community and build village together and tribe and share experiences and just enjoy what God put us here to do, which is to interact with our brothers and our sisters of the world. Pause. Sorry, I digress. So, but what he's saying here, and what I give roses to, is the American people for being so resilient, to understanding that we came from all of this federal aid to now, transitioning back into where we were before COVID, and gelling back into this, this mindset of going back to work. There's so many things that we've had to overcome mentally that I feel like we don't give ourselves credit for. So the fact that the Fed can say this month anyway that we can comfortably, move forward without doing a rate hike after raising the rate so much over the last year or so, I believe that this is we need to celebrate this because this is a huge win for not only me, not only you, but all of, America, our nation.
Our decisions will be based on our ongoing assessments of the incoming data and the evolving outlook and risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace.
Okay, so now we're going to get into the second half of this video. He said a lot, and a lot of this, the next items here are really data driven. So we're just going to get into this next part.
Forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026.
Okay, so what I just heard is the goal is 2% inflation, and it drops to 2.5% next year. And really, it's not going to get to where it needs to be until 2026, which just so happens to be the midterm election, 11/11, the midterm election, because next 2024 will be election year. It's 4 terms. So, but my point here is that all of this is happening, you know. I take into account election years, and I try to add, the pieces of the puzzle together, or put the pieces of the puzzle together. But it sounds like the plan is really about, about another 2 years out, right? For us to really start feeling some higher levels of comfort, like before COVID. So I believe in 2024, our situation will get a lot better with regard to the nation, right? And the flow of the economy, in terms of, spending money, providing services, getting paid for those services. I believe that it will begin to get better and going into 2024.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
Now, I think that in closing here, we have to take him for his word. They are committed. They have a bigger master plan with regard to how our economy is spending their money, where the money is going, and how it's being used. And so when I approach and I listen to, speeches or talks or presentations that address our economics here in our country, I do so with an open mind, trying to understand, okay, if it was me in that position, how would I budget, or how would I, try to make everything, come together like a symphony. And, he also goes on to say that GDP is up, house sales are down comparative to, obviously years before the interest rates were starting to go up. Unemployment is down, and inflation over time, which I think this kind of ties into another video that I made about Rich Paul, immediate versus long-term gratification. If the Fed just drops the rate, right, what will happen is there's a chance that inflation will go up again, and then we'll be in this same cycle. So the way I imagine what Chair Powell to say is pretty much, we're trying to control inflation so it doesn't come back. Now, I understand, never say never, and things are always changing. I can only imagine what these books are like, the data and what they're analyzing. There's so much, right? In my mind, like, these are some of the greatest minds in the world, analyzing this data and then coming out with a 10 or 15, 30, what was it? I think it was a 30-minute conversation about where our economy is going. Like, this stuff is, it's kind of mind-blowing if you stop and you try to see exactly why things are the way that they are. And so they're planning everything over a course of a number of years, and I align with that because that's what we try to do in our family, in our life. And so when you're talking about the economy, I listened to a rabbi. He gave a speech in one of his talks the other day, and he made it very simple. He said, if a woman was pregnant, right, and she didn't know what the outcome was, right, then she would freak out, because the pain of having a child in your stomach and then burying a child it's unexplainable, right? It's the worst pain somebody could ever go through. Like nobody should go through that pain. But for the fundamental reason that a woman understands, she carries a baby for 9 months and then she delivers that baby and then the pain goes away and she has this beautiful essence, this beautiful child in her hand that she can call now her son, her daughter. It makes it all worth it, right? So if we are going through a time where our economy is changing, right? Interest rates are high, the rate environment's high, right? Our buying power is a little bit lower or a lot bit lower than what it was, prior to the rate hikes. Then understanding that this is too a temporary thing, and then understanding where the rate hikes will stop, and then when the interest rates will come down and what you will do at that time or before that time, is all relevant to the conversation. So stay open-minded, continue to follow how our economy is moving, and that'll help determine, the things that you do in your daily life. So live consciously, love consciously, and I'll see you on the next episode of the Premium Podcast. I'm your host, David McDonald, aka DMD the GOAT, and I will see you on the next one. Much love, you guys.